All right, Thursday, January 26, 2017. Start off again with the put call ratio. Okay. I have, there's three different ones: individual put calls, um, index put calls, and then there's a total put call on here. I believe that all three are lined up. What I'm doing down here is I just kind of eyeballed, here's the mushy area, one standard deviations, we'll say two standard deviations away. And then when we had frothy calls, I just kind of lined up to take a look at how things would move afterwards, after we hit some frothy put call ratios here. Okay. This is from yesterday. We're getting near another area here. So in this case, if you are long, all right, so then what I would do, since I go back and look at the eyeball and go, well, this took a couple of months. This took a series, we'll say calendar roll. So now you're beginning to look at, well, okay, we're working on this thing. What about the old sell in May and go away thing? So would I want to sell, May calls against any longs I have? Do I want to do it in the money down here, and just pick up a little bit, but then you're hedged all the way to here, right? Okay. Or find another spot here, like a trigger. This would keep your eyeballs on this area here, that kind of thing. So that's how I look at it. I'm looking at it at people are getting frothy. Even here, we dropped down right into the end of December. Okay, so it's the same type deal where the put call ratio is getting a little frothy. We're kind of flat right now overnight. That kind of thing, right? So you look to sell some calls. So what about we're here? We're going to roll into February. So do I want it? How I'm treating this here is how are we going to roll the people in March into June contracts? Should we look at being short for June? Is it 1 month down and then 2 months up kind of thing? Once we get there, we get there kind of thing. But just once again, here's put call ratio. Say it gets frothy. Okay, so we have for last year we have like one signal, two, 3, 4, we'll say 5. So about every couple of months you're getting a signal here. So now we're getting a couple of frothy ones up here. The deal is of course you look at your portfolio and some of your stuff that you're in, it isn't at the highs and stuff. So it's eat your own, each on your own kind of thing on figuring that one out. What I would do is I personally wouldn't add. I wouldn't add onto losers if you like the stocks, okay, until we get a hard break, because they've already dropped. How much more can they go? And that's how I look at the market. Now I want to, something that's been beat up that you like for whatever reason. Is it in your backyard? Do you work at the place? That kind of thing. Then I would wait for the market to roll over, and then that's when I'd probably do writing naked puts on a stock. If it's gone from 88 to 20, then you can start working. You're like, well, okay, under 20 is okay, that kind of thing. So, once again, I'm looking at, here's a frothy put call ratio. We're on Thursday and Friday. Okay. So these are the days that I come in and try and go against the grain. Say, for example, you wanted to short the market, okay, because it's flat here. You don't think it's going to carry on a third day, or it is a third day and maybe it just goes sideways all day. Well, then I'd come in and buy those cheap puts, right? Basically you're long, okay, on here on a swing move. This is the third day. You have GDP on Friday. Maybe you just want to take your profits or just put your stop in here, or write, SPX against your E-minis or SPYs, that kind of thing, for just a couple of days, or in my case, look to buy puts. And go running around here and look at all the earnings, Monday, Tuesday, Wednesday earnings so far, and see if there's anything that poked higher and you could go against that. Maybe it's a spec play. That's what we're doing, right? It's just like, woo, let's go chase after anything and find something. Then you're down to a coin flip, And in my case, it's like, okay, so you're long and you're just itching to get out, How do you know this just doesn't continue on, right? Because we have a breakout to new highs. It'll have to come back through here and lose it and then it begins to go back into the larger area. How many issues are going with? Those are the pink dots. Pink dots aren't working out either. So it's going up. It's a select shares are going higher, and then, that kind of thing. Here's equity put call. What do I have on this one? Here's the NASDAQ comp on here. I'll just do it anyway. This is just the NASDAQ comp. I posted a chart yesterday from about 2009, late 2008. The NASDAQ has been the outperformer, so that's where you would have the most pain. You're working on new highs. You're trying to pass the stock off to somebody else is what you're trying to do, but for some of those, institutions and that you're going to be long forever, kind of deal. So, in my case here, how I look at it is, you have VIX falling again too, down to 2014 levels. So you're looking forward here, because once this thing starts, you can't go back. Like the Mexican peso or the British pound in my eyes right now, you can't go back. So you have to kind of anticipate what's going on, right? Okay, so this is individual put call here. Okay, equity. Okay, so this is the individual one. It's a little bit further down, for you getting your spike, but it's it's there. We're only talking less than 5% move type of thing from the last, But the deal is you're watching, you're just stalking this thing out. Okay, and that's all you're doing is you're keeping an eye on, there's enough gas in the gas tank. You're just being, what did I say, vigilant. You're focused on this, especially if you watch the damn TV and you get all caught up in the stuff, especially for you younger folk here. Warren Buffett isn't a day trader, right? He loves to come in when there's blood in the streets. He understands the whole macroeconomic type deal. What did we have here? We had a spike back in. This is 15. So this is China here. Market rolled down. This is the NASDAQ. NASDAQ was the leader, then the Russell took over, and now the NASDAQ is doing its thing, which is it's supposed to do, because I think we're in that blow-off phase. All right. All right, so down in here. So here we have individual put calls, so we're going to need some more individual stocks on here to get that one kind of frothy. And then here's the index, okay, put buying and that. So we're down to here. You came up. All right, so we need more individual shares and less index. So we need selective frothiness here. And that goes back to those who do watch options, and you're back down to, your IV, your volatility, implied volatility versus historical volatility. Where's the volatility? Similar to this thing, where's the volatility in relationship to the mean here? You get it out of line, frothy call buying. What did this take? Here's May, June, July, August. Play the same game as 2015. So here you are. So May through August and September. September is the end of the fiscal year. So our POTUS here is probably going to run out of executive orders before the budget. of September 30th is the fiscal year for the United States. All right, so that's kind of how I'm leaning on this deal. So let's go to the charts. All right. Dun, 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 dun. Rock and roll ski. All right, start off here. Aussie dollar. Okay, the money flow, the bodies are in it. 2-day charts. The overhead resistance is how I look at this one. The dollar is at the lower range, so we're back to, if the dollar clears, it's at, we'll say 100, clears 103, then you're aiming for 105 to 108, 105, 106, 108, that kind of thing. That would also imply higher interest rates, which would also begin to I think, affect equities, certain equities, of course, because it's going to cost more money to go and do this whole capitalization thing, unless, of course, those corporations that do have money across overseas and that, then they will be able to capitalize themselves here. So we're walking into some stuff here, okay. You know, the first shocker to me was the almost 7% interest rate to go to a secondary postgraduate college. That was kind of a scary. What are we doing? We're teaching kids that 7% is a pain in the butt. It's all good though. We're just trying to keep this whole empire thing alive for just a few more decades. Can we weasel out a few more decades on this thing? Well, think about it, right? You have to go into debt. And it's easy if you displace everybody with the debt. But if your growth stops through, say, immigration or babies, you know, the whole debt deal. I mean, at some point, you know, you just walk in and you know, no business plan. You're just off and running, you know, to try and you know, to hold the thing together here. All right, yeah, and the happy places overheads. I kind of lean on the short side here. It did move up overnight, and I think the Kiwi did too. Currencies. All right, so the sideways thing in the cash market looks like a head and shoulders. What is a 15-minute chart on the Aussie? Head and shoulders, possibly. 75.20 is a cracker. All right, these are supports down here. Long legs, you know, for me, it's just the sideways trade for right now. If it's not, you know, we're supposed to find one thing, follow it, and, you know, love it, live it, you know, learn it, love it, whatever, blah, blah, blah. British pound, we're all the way back up to 126 now, so that's a quick 600 ticks on here. If you can get into 124 again to add or buy, do so. This is the ATR trailing stop for the shorts on here. I should go look at committed traders on here. But like I said, I think that British pound and the Mexican peso are going to be two of the better ones for 2017 on the long side here. Yeah, 124. See, now 124 could come in with GDP and the dollar on Friday. So save some cash for Friday on here. But if it clears back through here, then I'd expect it to come hit the stops here, trigger all the computers, and then you know, you're at 127. We maybe end up being shy of 133 or 131, 133 again here. But at least we're getting a larger sideways channel in here. EDX is reset to go with the trend. Okay, so it needs to turn up. As you can see, the ADX exploded. ADX is a trend indicator. It tells you if you're in a trend, so you can hold on to something longer than 3 days. What's that, Kev? We can hold this stuff longer than 3 days? You can hold it longer 20 minutes. You know, that's the whole key to this thing. If you're a day trader, you have to go find that elk every day, and then you have to pull the trigger, and then you have a carcass. You know, it's a lot easier just to go, okay, you know, these are 2-day bars. So I just say, okay, this looks like, you know, that's why I prefer weekly. You know, Monday's a good day because you have all the fish. They're so eager, you know, they got to get into the market. Us futures players, we got in on Sunday, you know, that's the whole thing, you know, and see what they do. You know, it comes down to Friday, you know, the whole week long, were we able to hold the breakout? You know, what's happening? And that's why I play weeklies. And then when you just get one bar on a weekly that looks like that's pretty strong. Well, these are 2 days, you know. So basically you have a little bit of a shadow here. So it's like, okay, maybe 124 on Friday with GDP at 124-ish. Suppose I could break it down. Here's 125.40 is a meaty area. Down here's the top of the channel, 124.30. Okay, so what do we have an A, B, C pattern down here where we at Monday, Tuesday, Wednesday. That's pretty deep, 125. And then the reversal is back up in here, 126.5. Go back to being long. The drop here at equidistance, 124.25 and 122.70, so 150 drop on here. So that would be 125 even. So anything in 124. Happy place is around 123. I'd have to say I'd be interested somewhere in here. Start trailing it down. You know, you have 10-to-1 leverage kind of thing. You know, if you're, you can change the leverage on some of these brokerage firms too. Say you're 40-to-1 instead of 50-to-1. You know, if it comes down here, you can drop, or it's actually the other way. You're at 10% leverage, okay. All right, and it comes down here, you can change it to 20-to-1, I guess, not 10%, 10 times. All right, 10 times leverage. Then the drops, you can raise it to 20% and then add some. If it gets a little deeper again on you, can move your leverage to 30-to-1. Calf! Hey, look, folks, this is how it's done, right? So you increase your leverage to 30-to-1 and you buy in, and then maybe she turns. Okay. Then you crank it to 50-to-1 and you buy it when it breaks out. And then what happens? Kaboom! It's all good. We've all been there. All right, so the ADX, it did rise with here, but it faltered on this is on a 2-hour chart here, so probably going to be some corrective action in here. I'd look probably to add on this. We may go into Sunday, Monday on here. So, but we're trying to hold this thing together. You know, you're trying to support, 124.20, 124.25. You're trying to support that area to keep this thing alive. It's alive. 1 British pound. All right. CAD, bodies are in it. Happy place. If it triggers through here, then we'd have, in theory, stronger oil. What was that one? Natty gas, 344. Wow. Those guys definitely like their natty gas this morning. The deferred contracts in natty look sweet. The front months look awful. All right, so this is the CAD here. I'd play kind of on the short side of things, just off of the bodies being in here. But I will pass kind of thing, because if the dollar gets stronger, in theory, this would come down. I'll still lean that it does the same type of pattern in the 80s. Euro, same type of deal. But cash isn't flowing in there, so there's probably a good chance it's going to run to 109 on here. This is a GAN line, 106.85, 106 even on here. To me, it's kind of like a pass deal. It's not a really good setup on here. I don't think I think it'll probably see 109 first before par. That's how I kind of look at it. But we have GDP on Friday, so that'll definitely warm things up on the third rate hike, or how many rate hikes we're going to have, or blah blah blah, whatever. All right. So here's the Japanese, and you can see the ADX, rolled over here. So in theory, it's at least going to go sideways. Okay. So it's pulling back on here. So that means the dollar against the yen is getting stronger. So that'd be US dollar yen. So what do we have here? 87. I want to play it if it's goes through the other side. This pattern looks familiar. Does it not look like the bonds and notes and stuff? That's right. Because remember, in the 80s, the Japanese were the #1 owner of our debt. So bonds go down, the yen goes down. Okay, stronger dollar, blah, blah, blah. All right, so I'm looking at this as more of a trade off the carry trade, and unwind that and beat on equities kind of thing. That's what I'm just everything was smooth, right? The U.S. yen ran all the way from 102, 104 to 124, and then back to 104. That poof, billions of dollars, poof. What happened? I don't know. Oh, you have to love it. But now we're back the other way. So I'm looking for the carry trade to unwind with equities and one more bounce up and up into here kind of thing with U.S. debt too. It's the same type of pattern. They all the computers. Right, the computers do all the work. The humans just come up with the formulas, that kind of thing. Still room to run on the upside with the money flow. This now kind of leans that it's corrective in nature and then heading lower because there's just no interest in here. But we shall see, won't we? Same type of deal. Does it go through here? Does it go through there? That's the deal. All right, could go sideways. And there's a happy place and it's trading below it. And basically what it's telling me is that there's some interest in the dollar at 100. Just a little. Evan, don't be facetious. There's a lot of interest. All right. What I'm trying to get at is instead of I was looking for something longer than a 3 to 5 week correction, maybe 8 or longer. Something where you put it on and don't have to come back for a couple of months. Mexican peso, this is the ADX. It cracked when it bottomed. It's had a pretty good move. It's running into a band of resistance on here. You want to look to buy on here. Also save money if it comes down here. It's not much off the bottom, right? So what, put a buy down. Can it happen? I don't know. Plane crashes, you never know what happens. Okay, so the deal is save some money and have your risk down on the underside here, just in case you get that. Everybody that bought in there and that was smart. Okay, right? So I call them. I'm at least smart, right? I mean, I'm watching this and I had the brains to go against it, right? I just realized, well, how much bad news can you have in Mexico, right? What did I call them? Diablo. I apologize. They're all, in my eyes, they're all puppets. I just believe in doing the right thing. All right, so this kind of worked out here, the old trailing ADR or ATR. Right here is what I'm looking for on the downside for a risk deal. Comes down, goes higher, cracks, and then just whoopsie daisy, right? So the same type of deal. You come back and swipe down here. Everybody, all the smart people that got in, they weren't well capitalized and they were forced out, right? It runs into some resistance and we get the first pullback. How does that pullback work? You could, like I said, all the smart people, they're in there, they're early, they're like, my God, I snagged one. I'm often the cash guys, U.S. Mexican. I'm not saying it's going to come down here, but the deal is if it comes down here, wouldn't it be nice? You just saw what happens when you snag one off the bottom. Just like with the pound, I stocked that thing, 35-year low. Now we have a double bottom. At best for the bulls, we have sideways, a larger channel of sideways, But the deal is you snagged a couple, and the key is now to hold on. You want to hold on to these things. Somehow you have to, it's being capitalized is basically it. Can you hang on for, that opportunity? You're going to end up having a loss depending upon if you added, hopefully this area won't be lost if it's just a spike. What did we have? We had the dollar lose late in the day. Some of my triggers went off. If you remember, 2015 or something, we had something with the dollar lost 2 or 3 handles on a Friday afternoon. Something blew up. Was that going into break or China? I'll have to go back and take a look. See, that's what I get to do. See, it's this Kevin, 12 years old, in the library on a Sunday or on a Saturday, going, hey. Where's that value line? I don't have time to read all this stuff. Let me see the picture. Ooh, you look ugly. And this was in the 80s. So there was only a select few of those great entrepreneurs. All right. So that's Mexican peso. We're going to run into something up in here. So have some powder on the way back here. Like I said, GDP on Friday, we may get the stronger dollar. Oil, holy bucket, some sort of symmetrical or ascending triangle thing, still hanging in here. Brent looks worse than crude. My only issue here, going higher, is that this is a hell of a pause above previous or this is on support. Okay, that's the only thing that's bothering me here. Is it's like, well, we're doing we're definitely holding up for an extended period of time. When you pause, when you break out, usually you get a pause, couple of maybe 3 days, where they go, whoa, where's all the sellers on the new high? They're not there. Okay, or the people sell on it go, hey, we're the sellers on the new high, and they get caught and it runs. And that's the thing here, is that it's like, but the money flow is in here. This is on Brent. The ADX is beginning to reset. I drew a hard trend line underneath here. I have to break this down, take a look at it. Today's Thursday, so we have natty gas. Yeah, we're getting the old triangle thing going on here. I really don't like the... It's kind of like I don't want to sell into the rally if we do get it up here, but that's what you have to do here. Because what it is everything's beginning to narrow. You have a wide range, and it narrows, and this is it. The computers are going to go, swing or the other way. This is beginning to reset too. And here's the happy place. So we're coming down to something on the Brent here. No, that doesn't seem to work. That works. Just something like that. And actually, this is a GAN line. I just threw these on here. It's just a reference point. But remember, all these reference points are in the computer too. Here's the belly. We're right at the happy place. So in theory, okay, you either buy on here or you sell down here. Then there's known as the whipsaw. It goes up here and then it goes this way. Well, then, how about this? You buy one here and you sell two here. Okay, so you got caught and you're like, shizzle me timbers. And then you get out of your short and you now you're long one. Okay, because the lean on the 2-day deal here was that I wanted to be, I'm looking for shorting out. The money's already in there. I want to take the short side if it goes below here. 54 1/4. I want to short it, then short it down to 49. The only thing that's bothering me is it's taking forever here on this breakout. Here's the resistance. It broke out. It retested it. It moved higher. It had all the OPEC news and all the fun and games, and it can't muster anything, but it's taking too long. On top of everybody in the planet knows that oil is bloated with longs, and it's like, okay, why isn't it cracking? No, and that's the thing. The psychology's there. I mean, if you told, think about this one. Somebody's, bodies are long and bodies are short, and it's not happening. Now they're going to get antsy. That was the same thing I wrote about with the don't short a dull market, and then all of a sudden it's like swing, and everyone else that reads me goes, "Wow, did he just say bye?" And boom, there's your 20 points or whatever, right? You're done. Do you call it a month then? If your minimum margin in there and what's that, 25% or something? You call it a month? I mean, I'd have to hire somebody to make sure that I don't go and do this, something that I have passion for and love. But just that's how boom, that's it. Your month is in. You waited the whole month. You stock something. You get your 20 points in the S&P, whatever, 20, 25%, ROI, ROR, whatever. Who reads the prospectuses anyway? I mean, we don't even get phone bills. Save a tree, I suppose. just shoot it to me. I only get 4,000 emails a day, not a problem. All right, so still leaning bearish on here. We'll say it's a head and shoulders. Right here should do the trick and crack it, and then just stay short if it is. On the long side, grrr. in theory, you're supposed to go with it because what you'll then have, right, is you'll have the supposed all these longs in here in the market. What happens if they all decide that they've had enough? You know, they get one tick in the money and they're like, oh, I can't handle the stress. And they pitch, you know, and then all of a sudden you have a whole bunch of selling going on. So that's that whole reversal deal, you know. So, but I just, Brent short, you're looking for something. It's getting pretty freaking narrow in here. Something's going to happen here real soon. Range is narrowing, all right. Brent, and then here's US. All right, we're back to American stuff. A little higher high on here. Like I said, I prefer the short side. Money flow is, the bodies are in it. Run this one down to a 2 hour. Happy place is 45. Run this down to a 2 hour. 2 hours. Same type of deal here. What do we have? Kind of like a diamond pattern. Diamond pattern. So it's compressing. This is a diamond pattern here. Well, compression, it's at its happy place. So this is your 53.45 area. That would be resistance type of thing. Same type of deal. You know, maybe, you know, it's getting so narrow you can drop your trigger here. Where's the pivot? ADX line. So go long oil from here in the morning. Where are we at? Where's my price? Oh, there it is. 52.89. Do we go long here? Let's sell it up here. 89, 80 cents. 60 to 80 cents. Well, definitely gonna watch your oil here. All right. One belly curve. That's the bell curve here. Yeah. Well, this is, we're definitely going to know what's going to be going on here real soon on the oil. Bless it. Like I wrote a couple days ago, you know, the old dull market thing, but this is your, you know, all the computers and all this is a very narrow range. So it's not going to take much. And your risk is what, 53.75, approximately 51, we'll say. So it's a $2 range here. Okay. So we have it's narrowing. So in theory, it's going to break out at least a buck either way here. Okay. For swiping, if it runs up here, I'd probably want to bang it. Greedy bastard. But the ADX will be turning up then too. You know, like here, it turned up from down here. We traded, broke higher, ADX kicked in. But this is, I'm looking for this kind of extension like this here. Here we go, right? Same type of pattern. Comes up here, you whack it, then ADX turns up. And you get the extended lower. Excuse me, sorry about that. All right. Yeah, I'd whack it maybe up in here, a little under 54. See if it pans out again. Well, we're definitely going to see how this plays out. All right, that's the old accrued dollar. All right, dollar bouncing off the support level, or the ATR. Where is it? ATR trailing stop, just straight out, right out of the book. Haven't modified anything. ADX is 10 on there. That's a little sensitive. I like 10. We have 10 fingers. I understand 14, Mr. Wilder. I truly understand that. Because on day 15 would be a Friday. And then you can look at your weekly bar. Third weekly bar going, hey, do you want to buy here? All right, so the dollar's here, so that's what we have going on. I'm going to say that this is resistance 101.15. We'll say 101. I'll look at that. Under here, though, there's going to be some damage going on. You're going to have gold explode to the upside. Bonds will shoot up. You know, basically, we'd have to have a weak GDP. How are earnings coming in? That kind of thing. You know, you get a rough idea. Yeah, so anything through the bottom here. Now in a happy world, the dollar comes off, equities roll over. It's kind of like this. If GDP comes in strong, then they go, oh, they're going to hike the next month. Okay, they hike the next month. We go into next week, and the minions just start buying up again. Now they buy individual stocks, and all of a sudden it's like, okay, we're raising interest rates, and they didn't pass economics and finance. Okay. So now the fish are basically blind. So then what we're waiting for is an inverted yield curve. That's where the overnight money is at 6% and the deferred money is at 5%. So no one in their right mind would go in and get it at 6% to turn around and lend it out at 5%. And that's an inverted yield curve. Fools rush in. If you have a string of homes going up 8% a year or 9% a year for 3 or 4 years, if money's at 6%, you're like, well, I'm still making 3% a year on the home, that kind of deal. $500,000 home, blah, blah, 3%, yada, yada, whatever, real estate's okay. I mean, you need shelter. It's the next 10 homes that's the problem. What do you mean all their air conditioners went out? They're being recalled. Well, send it to them. They went belly up 2 years ago. Yep. All right. Dollar. I will, what does that say? Not heed the warning, but I'll respect this low for now. But for me, my little alarm is if the low is taken out, then that'll be, you'll see it. And remember, the little machines are quicker than I, make sure you have your stops and reverses and all that other fun stuff in there too. You saw a pretty good move off the old dull market email. So, all right, this one is a fresh one here. The mid-cap mini thing goes along the lines of the same type of pattern with, say, the Russell and the Dow, but it didn't go lower. So they're going after the young ones. Okay, the Nasdaq's moving, the Russell's moving, and the growth areas. That's what we're shooting for. Because if we continue to raise rates and the dollar gets stronger, those conglomerates overseas are going to run into problems. The dollar's 103, 104, 105, 106, 107, 108, and even if you drop the bringing the money back, you drop corporate taxes. The dollar goes up to 120. If the dollar goes up, we'll say 20% from 100, goes up from 100 to 120. That's 20%, but you're only dropping the taxes basis point wise, right? We're just trying to keep this relative terms here. So what are we at? It's whatever, 35 to 20, that's 15. All right, so they're still losing money, and it's coming again, and they have to be on top of this, right? You assume all these other corporations know what they're doing, i.e. General Motors of the past, Kodak. It's pretty scary that corporations are lasting less than 17 years in the S&P 500. That's what I read. I've been told 20 years. Did not know that corporations were lasting 90 years in the 1920s. But then again, you're on a roll from in the 1870s when America took over from Britain as the engine for the world economy. And blah, blah, blah. Still has room to run on the upside. It's a breakout. Basically, this is, you can set one alarm and go, this is it. You're going to have another one up in here for a retest kind of thing. Like I said, I'm just watching for a failure. They go up and they go, okay, we're going to come back and test this. And all of a sudden it swipes out the bottom. And all of a sudden, before you know it, you're back down to the happy place. And then you'd come up and make a right shoulder and then come down like this. That's what I see in this Rorschach. And I'm not saying it's going to happen, but that's how it would probably play out. I don't expect it to go straight up and then, come straight down. But you never know, and you have to be prepared. I was a Boy Scout, always be prepared. All right, so a little spinny top here. Remember, these are 2-day things here, whatever. It's a little spinny top thing. Expect it to come back. This is the ES. It'd be about 74 for down here. ADX is turning up. Remember, these are 2-day charts. We've got a little bell curve area here. Happy place is 2161, we'll say. So what do we got going on here? So we go back to the 2 hour. Lots of bodies up in here. Let me send this one out real quick. Oh, where's the, was it a daily, weekly? Where was it? Was it just the 2 hour chart? Oh, it's just banging on the top. Linear regression. I'll send this off to freaking stock twits. What should I call it, Kev? How are they going to find it? They just under my name. They just go to my name first. They look at all the BS I sent out. Happy Thursday. There you go. Happy a Thursday, please post there. Under my name, yes. What's my name? Hindenburg, Heidelberg. All right, ADX is taken out. This is a 2 hour. So this is a powerful move. Okay, we broke out of it. Yada yada yada. To set your alarms underneath in this thing for when it comes back. All right, same type of plan is working out here. RSI on a 2 hour, it's turned red on here. Remember, I hit it yesterday, wherever it's at. Okay, so you have money flow, ADX, and the RSI. So the RSI on the 2 hour thing. It doesn't mean that. All it means is that, you know, in relation to where it's at, it's a pricey move. But you're working with a breakout. So in theory, you always want to be buying the breakouts, because this thing could just go straight up for 2 years on a blow-off move. Hold on, 106, no, 2 years, 7 and 8, you know, that kind of thing. You know, we just continue to raise rates. The stock market won't stop. They raise rates and nothing happens. Raise rates, nothing happens. Raise rates, nothing happens. Raise rates. They did that 14 times in 17 months to jam the economy from 2004 to 2007. They stopped raising in 06. And then here in town one day, I was out and about in August, which is a slow month anyway, but it was like a light switch. I'm like, where are they? And I'm like, oh my God, it's coming. Well, I know cycles, right? Real estate cycle every 18 years. Here it comes. You know, you just stand on your little box and just start screaming away. And they like, you funny guy. So I'm like, okay. Guy with a Monarch garage, a 6-car garage with these little, what do they call those, jet skis and sand rails, and the boat that costs more than the Lamborghini. And you're like, how old are you? And Harold's gonna die and Maud's gonna be left with a Monarch and the Monarch garage and the sand rails and the boat. And she's like, no, I want to go back to California and be by my sister. F Lake Havasu. And you have and it's not just one Harold and Maud, it's a town full of it. The younger generations are coming in and scooping. If they have 3 kids, you're going to find probably one that would want to tinker with wrenches. One of my favorite jokes is every time I drop, it's all about the metric system. America's not on the metric system. And so every time I drop my 109-piece socket set, I just curse the guy with the 364's patent. All right. So, yeah, all right. We'll say that this is going to hold at 93, 94. Okay. You're working off of daily. I think I posted this prior. This may have been on Tuesday or Monday. I posted pivot points. Let's see here, Kev. Why don't you just go and look it up? Yes, sir. SPX. No. How about we start with ES March 17. You have to switch over the screen. You learned your lesson, right, the Kev? Desktop. Charts, share screen. I need this to be daily. Actually, I'd like it to be that one. All right, so here we are on the breakout on the S&P. So the targets here we have, this is a weekly. Well, okay, here are weekly numbers, pen and paper handy, 2411 and 2586. And I believe 25, somewhere around 2586, there's a prime number. And you're like, hold on a second, what? I go, well, it's a prime number. All I know, it's a number not divisible, blah, 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 blah. But I wonder how computers handle prime numbers. Do they round up or down? I don't know, whatever. It's just math. All right, little pink dots, blah, 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 yada, yada, yada. Those are that. So, but on a daily, remember? So we're working on thinking about what are we going to do for the banana heads for June, all right? You know, how are we going to roll them? Are we going to roll them in the high and then roll it over until over the summer, you know, in March? You know, they're good, you get them to June. It's like, okay, do you stick them there or do you stick them in June, you know, or September contract, that kind of thing for the fall? You know, that's what we're looking for, you know. At some point, this will end, you know, and I think it'll be quicker, or we're in the later stages, so you're looking for an end game here. You know, in theory, there should be one recession and a pullback, and then a continuation with the real estate cycle here. All right, the money. These are tough reads here because you can see that only when the contract got active, picked up. But yet the money part here, which hit the 2277, and it lost 30 points the last time the unbalanced volume was up here. All right. 2220. All right. Pivot here is, what do we have? 2276, 2313, and 2332. All right, so those are the numbers up in here. Okay, that's the computers are going to go there kind of thing. Magnets, they're just magnets. Like I said, log charts, angle of ascent is what bothers me. You know, little pink dots, you know, blah, blah, blah. Oh, look, sideways. But from here, though, when you get a sideways like this, usually it's a straight up extension. Like I said, I'm looking for something where there's a failure on here, okay, that it comes up and maybe, swipes all the way down here. That would be that there are no resting buy orders in here, okay. All the buying is going on up here. No one's buying up in here. All right, and you chase after it this way and it doesn't work out and it comes back. I mean, this is a breakout. In theory, you should test it. Here's the pivot. So we should see pivot again, right? What is that? 2276. All right, so we go into 2300, and then all of a sudden you're at 2276, and then what? This is the risk right here. Is you have a breakout, it takes off, usually you retest it. What do we have? Right here's a retest. It breaks out, goes above it, comes back, retests it, moves higher, sideways action. You know, comes down, swipes the bottom, you get a little springboard, springs up, barely swipes the top, comes back down. We get a much longer flag here. Wow, that's a long flag. But it's taking a little bit of work to get this thing going, and now it's going to go in here. Now we're watching the put call ratio, and we're watching for a failure. You know, remember, I was a cheerleader from January and February of this year until pre-Brexit. So I was, I jumped up and down for what, 300-400 points on this thing from at 1830 or something until 2160, whatever. So it's what, 330 points. I was a cheerleader on all of this, but then all of a sudden I didn't like what I was seeing. It turned out to be a running correction. Like I said, to each their own. I'm sure a few of you with your portfolios are like, wow, I'm in the wrong shit. Yeah, that happens. That's right. Well, it's like the stock market thing I showed yesterday. I mean, the return was like 200 and something for the NASDAQ, and then the rest of them were, they were distance away. You may be in, I'm in the stock market. Yeah, but you're in the shitty, the shittiest house in the best neighborhood. That's why I like leverage and stuff. It works for me. My whole going in and, floor trader type thing. You go in there and whack it and you leave. Natty gas is on the move some more here, so we better move this thing along. All right, so that's basically what's going on. Is the risk right now on the S&P is basically coming back to pivot, which was 2276. And then from there, you're looking for any loss under here. You know, you're looking for, you know, people that want to buy in down here. You know, people that are short. Oh, I'm going to short this thing. I'm going to short it at R1. I'm going to short it at R2. 13 and then 23.13 and 23.32. And then go and look, start following your June contract. For some, this works out for you. The mini S&Ps is something to follow. You know, that's if I was stuck with one thing, I'd probably do it too. One, it's liquid. Two, it's a lot easier for me to read the stock market than these individual issues. You know, I get my sentiment on here. I get, you know, there's options available, especially start doing the whole weekly thing. It's like, well, wow, I don't even have to use, be a futurist here. You know, where do you see this going? Oh, I think it's going to go to 2,400 by the end of the year, but it's at 1,800. It's like, well, that's blah blah blah. That's what I do, you know. Downside, of course, is at the end of moves, they become a little more 91-degree charts, and that can get kind of painful and stuff. But they position with distant options. That's what you do, you know. Going back, yeah, we're going to go back. Make sure this thing doesn't last 2 hours. Where am I at? Thinkorswim. All right, so the ES, so we're back to this. I'm going to say that this holds the 94 area. This would be a deeper run to 88 on here. And this, to me, well, that's right. We're looking for the retest, right? So we're back down in this area, Kev. Just get done talking about it. 2274. Because now I have this thing going on. Man, this looks ugly as crap. 5 minute. ADX is reset on the 5. Go higher from here. Just like with the oil, right? I can't buy on this account. Oh, la, 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 la. All right. That's above the retest. I need an alarm here just in case we get dropped too far. All right, moving on. Gold, wow, came back down. All right, so the shaded area is 70% of where the trade's happening, right? Happy place is up here of the data that I have on the screen here. All right, so coming back down, where are we at here? We're in the 70-76 area here. All right, so what do we have? We're working against the dollar here, right? So if we're going to go with a move higher, okay, you're going to have to come in here in in the 70s area, 1170 here. Okay. The flip side of this, to say that this is a V bottom and it comes down here and then it trades sideways and then takes off. You may have one of those. The economy comes in hot, they can spin this thing that we have inflation, and then Mr. Trump's going to make sure everybody's employed. Oh, what's that? Everybody's going to have a job, even if you have to make them up yourself. We're going to build bridges, and that sounds like communism. We're just going to whip up a job for you. You're allowed 2 bottles of vodka a day. Oh, geez. I'm going to need to find a really easy job. Can I be the guy that holds the stop and go sign? Or the gal, whatever. All right, so on the gold thing. All right, we're sliding into this. Yeah, here's the 70s, so that would be the slide. Last great hurrah for the bulls. You can see here, this is the RSI, the little green thing here. So the RSI is on a 2-hour chart is reaching the oversold thing. So what you do here is just trail your stops down if you're short on the previous, where am I at? Like the previous bars, Say if you're okay, if your previous bar, say you get snagged, don't sell them all. Sell you know, if you have 10, sell whatever, 2 or a third, we'll say. And then on the other end, you know, like in this case, you could have, since you have 3 bars here, you know, buy 3, you know, or on against this here, you know, here would be your stop if you're short kind of thing. 3, you know, 3 and 4, you know, 14 or something to go along on it. You can see the money flow come out of it. Here, this is just a classic chart. Here's the money flow. Prices traded up, but the money didn't come with. So it was basically your onesie twosies buying in here, or maybe these are the people that are buying 50s and 100s on the way up. And then also the money comes out of it and it makes a double top kind of. You have your onesie twosies that were in here. But you have the RSI that's oversold. The money flow, they may come in here, you know, and support it. And here's your ADX line, so it's still running. What's this one? Natural gas. Natural gas is just not going to give up today. Holy buckets, did that say 48? All right. Okay, we got to move along here, Kev. Natural gas will be at 408 before you finish. What? What do you say? All right, so the ADX is running on this thing. It's a 2-hour chart, blah, 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 blah. Basically, I suppose just you're going to come in and buy gold. Where was that thing we had on yesterday? It was GLD, right? GLD. I just threw something on there because options are gambling. What was G? You know, what do we have here? So we have some sort of dealy bopper going on. Where is it at? So gold. Do I have an order on here yet? No. Closing order 27. Okay, so the thing yesterday was, I think we sold it for 30-cent credit, whatever this was. It's a bear put, or yeah, bear calls, whatever. You know, bear call type deal, right? Is that what I got going on here? Short the 14 and long the 13. Oh no, I'm buying this back. Okay, so it's the other way around. So okay, so sold it at 30. All right. Depending upon your broker, it may be $1 a contract on the way in. So it's a penny, right? So a penny in and a penny out is 2 pennies. Some brokers are 3 pennies, so it could be 6. So I need to get this thing to 24. First reason why I hate options. All right, you have 20% is going of your maximum profit, right? 20% of it is commissions. Holy buckets! I wish I could charge 20%, right? I suppose I could. All right, so 24. So gold's falling, it's coming down. I said 8, whatever. Pick a number. Oh yes, I can put a chart up on this, can't I? Well, we'll how far out of the money are we? 113? You need to look at the charts, Kevin. All right, I'll buy that back there. Nothing like a quick tangent, right? You can add this to a chart, right? Oh my gosh, you're going to give me 3 of these? This is going to be a first. All right, so those are the 3 and those are the 2 charts against it. Oh, and I can't do that or lose all of these. So this gives me GLD. We analyze, we hate toss. All right, so that's where I'm at with my order, but I need to get it to about there where the beach ball's at, 88. So I need to slide that up a little bit. What about there, Kev? What are the odds of it getting there? That would be painful for the bulls. I'll just leave it for now. I'm close by. Well, I'll maybe adjust it up. But okay, so 15. So if I move it to 15, all right. You sold it for 30, you buy it back for 15, you make 15 cents on the thing, okay? What's that one? $1 at or above 132, okay. 15, so you know, you have 15 cents and 6 of it is commissions at $1.50 a contract. 15 and 6 is 9 cents. You know, and you know, yeah, I mean, okay, you made some money, but it's like, you know, it's a ton of it, even more now. 6 out of 15 commissions, third, more than, you know, a little less than that, 1/6 or something. What's this one say? OJ, triggered or below. All right, Kev, move along here, buddy. But I wanted to see those other contracts. Oh, you effed up those contracts, didn't you? Yeah, there it is. All right, so here's it coming down. 100, here's the number. So what do I want? This is the 113. 61 cents, 70 cents, 60 cents. All right. This is crude oil, CLDX. This would be DX, EMD. Okay. ES. ES is right at the trigger for the computers on this ATR trailing stop. ESGC. Gold is falling. We're now down. We're at 86. GE. Euros. ADX should be turning down. Euro dollars. These are like T-bills in Europe. I was looking for a swing. I got a whopping 2 days out of it here. I'm still sticking with it. Here's copper. ADX is turning up. Money flow is coming in. Like I said, I'd rather look for areas to short it to $1.80, $1.60, than versus playing it, 10 cents, 10 cents, 10 cents, 10 cents. But for those of you that are in copper, what do we have? 274, 276, 278, 282. I guess I'm just all upset because of this. Just because you don't trade something, Kev, doesn't mean you don't talk about it. Whatever. 5-year-old pouting in the corner. Money's in this stuff for your cattle. They're pushing beef pretty hard. What did I see? Oh, they had T-bones, which I believe are the same department as a porterhouse, right? And it was under $3 a pound, right? Isn't a porterhouse the same type of area as a T-bone? And if you do send steaks, it's okay. You can send me steaks. It's that deal where they send me chocolate in August. And it's 113 outside. Here you go. I'm like, oh, I like to play with the dry ice. And I put on my leather pants. I can't zip them up or snap them anymore. And then I turn up the guitar to 11. And the little dry ice sits on top of my amp. And I play, like everyone else, the wrong version of Smoke on the Water. Or it's not a version. Yeah. That's okay. Smoke on the Water. What an awesome tune. All right. Ellie, yeah, the cows. Pass on the cows. I'm not a cow guy. Natty gas. Okay, an extended play here. First off, this is the Feb contract. It's going to go off the board. It looks cheesy. Here's a gap area. So we're coming into the last trading day type of deals. Things can get kind of freaky. You can see, though, that the open interest is dropping on this here because that's what it is. It's the front contract. When we go through the deferred contracts now, it's going to look a little different. They're a little more bullish on the back end. Starting off at the front, though, and the bearish thing is that you have you may have a secondary distribution here, but when you look at the deferred contracts, they didn't drop as far. So they have that we're going to go straight up kind of look to it. But like I said, on the little situation deal here is if it doesn't pan out, you're going to have a lot of unwinding. The ADX is basically reset. So if this goes higher, this will turn up and you're going to have an extended move in natural gas. But we need to go through all the other deferred contracts on here. So we're starting off with this guy here or gal. Basically, you have a larger sideways, okay, and this one is the Feb contract. So you have a larger sideways. It broke out, failed, went the other way. This is basically your range, stuck in this range here. The new range is, like, say, 280 to 365. Then we looked at options yesterday, and we looked at the 350 area and the 325 for options. I believe today is the last options day, if I remember correctly, right, Kev? Today, the last day, options go off the board on here. So you get some whippiness, right? Whippy good. A whip. 90 gas, right? Is today 0 day? I believe it is. 0 day. It is 0 and counting. All right, so 0-day open interest and volume, that works for Kevy. Open interest puts, nothing. Open interest calls up here. What are we at? So our overhead pokey poke for March is 350, round number 50. And then the next one is 360 round number. Why do you do that? Stop clicking, Kev. Order entry. Single, what's it say? Sell. No, I don't want to sell. Oh, Lord. Don't be selling. All right. And what do we have here? So April is 350. So 350 and 60 on the calls. What's this one up here? 375 for March. What did April have? April have anything? Not much. All right. What I was basically doing is looking for max pain levels on the call side. So, in theory, you move these over 350, move it over 350. They have to come in, and either if these calls are naked, I'm going to assume that they're all covered rights. All right. 29.62. I talked about January. Okay, so 60 and then 75 for April, right? The Kev, that was your number. 75, not much. All right, not much in the options department. All right, so that's not a very good read. Oh, that's Disney. All right, so back to here on the call side. Okay, so on the front end charts, I'm going to have to treat it as the secondary distribution, that this is a, say like a breakaway gap or whatever for right now. As you go into the deferreds, they're like, whoa, it's going to go screaming. ADX is reset, so we're going to move over into March. Okay. Ta-da, March. All right, so. Oh, no. Oh, I'm on the, where's my stuff? Come on, the Kev. Get with the program, buddy. All right, so here I just measured out some Fibonacci, blah, 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 yada, 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 and it's up against it. So I'm going to assume here that there's going to be some stopper action here at 350 on the natty gas for this February. The other deal is it goes off the board. People are going to go to March, but I'm going to watch this one because no one's going to be watching it because of see how it behaves here. That can be some telling action. All right, because I had sent out yesterday that I was looking for February to gain on March. Okay, so see if it ends up being a little bullish on here. Because of the deferreds are bullish, that looks like crap. We'll do it this way. All right, so what do we have going on here? So March natty, first level is 51. What's that to 53? So 51 to 53 overhead resistance today for the machines. The happy area is about 30. ADX is reset. You can see the bodies coming into this. Now, remember on the roll, right? A few times since we've been playing this game, since whatever, November, October, whatever, the rollover starts high and then comes down, okay? Right, starts high. Do we have the rollovers here? This is the rollover here, right? Rollover, right? Contract change, rollover, moved it in, and then whee, ouch. All right, so the same type of deal might be going on here where you have a gap fill in the March, okay? Now this looks like shit. All right, today, 4 hours, is that anywhere healthier? That's the money coming in. Oh, Blarney. All right, so here's our resistance, 53 for March, okay? It falls shy into the top of the bar, so the gap fill. The money flow here is just because they're rolling into the new contract. They're rolling with a running start. EDX is picking up. This is a 4-hour chart. We can watch it that way. While I have this, let me continue through here. But what I'm going to do is since this is at the upper range here, okay, I'm going to treat this that this pauses here and comes back in, and we have a secondary sideways pattern here, okay. I'm going to play even though this is a pretty good runner, I'm going to play defensive on this and say, okay, that this what would negate a sideways pattern? Well, obviously poking its nose through here, but you're running into some, the computer resistance here on pivots. It's just a freaking line, but it's mathematical. The computers run after it. I suppose you could look at this as a 1, 2, run the third wave and then pull back and then go higher and fill the top of the gap. All right, and then what happens? And all of a sudden the weather, whatever, changes, and then it rolls back over, and that would bring it back into the channel here. Okay, the deal here is on the breakout. This was an upper area, and it bounced against it. It bounced against it again. Here's third time's the charm. If we come back through, we have to see if it holds this. If it fails, then you might have a secondary distribution pattern, and then it rolls through here. Okay, and that's what I'll do is, you have your trend. I talked about a larger degree sideways pattern, and that's how I'll treat it. Cocoa, at or below. All right, so and we talked about a head, shoulder, that kind of thing for now. But we'll treat it as this is, we'll see how it works out into the gap area and into here. April, I think I said 75 at the upper end. Okay, this is much more beautiful-ish looking chart. Okay, so, and I drew my trend line. What a good Kevin. So this is a basic trend line. This is a daily. This is a daily off the bottom. This is April contract, right? This is part of the whole March-April spread in action BS. All right, so this is just a basic trend line off the lows here. Just an eyeball thing, your little 30-degree deal. Yeah, it's 30-degree deal. This one's beginning to pick up a little more steam here. We're doing the, what's that, 45, whatever. I forgot my triangles in third grade. Okay. All right, so the angle of ascent is picking up on here, okay? What's this number up there? 367. Ooh, wouldn't that be a fun one? Pokes its head all the way up to 367 and reverses. Oh, Cabby. What am I looking for? I want to be warned. I said 367. Put you in ahead of time, right at the top, close in a little. Yeah. All right, so here we are. Okay, so broke out above this. What are we at? Daily? Okay, so broke out above the resistance, or these pivot lines. These are different ones, aren't they? Market profile, GAN levels. Oh, Camarilla points. All right, so this is Camarilla points. I'll keep it. All right, whatever. So this is more variations of the whole pivot deal. High, low, close divided by 3. High, low divided by the close. High, low divided by 2 times the close. Minus the 2 times the close. Blah 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 blah. You just take the high, low, close. Figure it out, but these are variations of it. And what it is just a reference point for, the computers are going to program this stuff too. It does look like it bloats over a little bit. This one kind of held up, these held up, but they have multiple levels here. You can see it, multiple levels. Like here's multiple levels of support close by, numbers are coming in together, Bodies are in it though, and this is this money flow just for this contract. So here it sucked them all out back over in here. This was my warning of larger unwinding here, but you can see now you're working on the gap deal. But I'd be vigilant about that price where she runs up, hits it, and then I'd be very defensive. It's the whole risk thing, it's pointing up and everything, and it's like I'm not looking for the upper end, because to me that's open-ended, right? In theory, I guess, right? I can go to the moon, Alice. But that's how I kind of look at that, it's the whole risk. What negates this moving? Well, here's one. Okay, so if it comes up here and then cracks back through here, is the bull market over? Well, no, it can fall all the way down to here, back to $3, and still be in the, the trend is still higher. What do they call that? The slope deal. It's this is just and it's not. These aren't logged, right? Yeah. So these are just straight up charts. if we clear this one, then we're back to working in the 90s again, you know. But we're into April, and I should move on here. All right, so this is May, and I turned it into a weekly. All right, so this is May, so this would be after the heating season. So things, remember, what is this? About a month and a half ago or 2 months, remember when I looked at the volume of the bodies that were in there? The May one, they were passing over. Okay, so I just threw the weekly on here just to get a rough idea here. Well, this looks awfully tasty, doesn't it? You know. So, you know, we're talking, you know, that was your trend line. Then we have another angle. This is, I set an alarm underneath it. You know, you may be off running in the races in months that typically don't get the attention. But what the feel here is that we all know that if it doesn't pan out for this year, we're walking into a drought. Mother Nature will not stop the drought thing. And we won't stop helping her. so is there a cover charge? All right. So they're buying the deferred when they can, because they know they're running out of time. You know, if it's every 4 years that you get a hard freeze or a drought or whatever, and it didn't pan out, you know, panned out in what, 12 or something? No, the last run up in here was 14, so it'd be 2018. You know, you need to buy out near a 17-year low. You know, it's still pointing up. You know, but the key to all of this is, you know, if you're going with minimum margin, you're out of the game when it comes back this far. You know, that's the whole thing is, you know, the whole deal here. You know, you buy in wherever, you know, whatever you buy in, wherever you buy in. That's weekly buy in. You know, you put up the full 28,000, 29,000, and it's at 35,000 since November. What are you happy? You know, sure. Well, then cut your margin in half again. You know, and you know, buy the breakout. You know, that kind of thing. You know, it's a 17-year low. It came into March. It came into a period when it's supposed to be going up, so that was counter-cyclical. Hell of a hammer, and then took off. You know, and this is where I think we got interested or whatever. The whole deal was nobody wanted it. It was at a 17-year low. It was counter-cyclical, and I'm like, hey, I'm interested. And this is where I started getting interested, right here. How do you get interested? I think I'll sell naked puts. Why are you doing that? Well, it can only go to 0, and the lowest low is 1. And how much, you know, somebody's going to pay me, you know, 10, 20, 30 cents a month to buy. You know, if I get caught, you know, I can roll it and spread it. I can sell calls against it. You know, like you're selling options, you're going to get out of it the following day, kind of thing. You know, what options do you sell? Oh, when where do you expect the bottom to come in? You know, oh, this period is usually a seasonal high. Well, that didn't work out. Here's the next seasonal high, and you got to bounce. And then it's just cratered straight into, you know, a period counter-cyclical. It went down when it's supposed to go up. It's kind of like the heating oil. Heating oil, you know, the same type of deal. October, November, December. Nobody used heating oil. All right, so you got a glut of it. You buy it. You know, then there's the old carry. You take delivery of it, or you put it on paper. And you store it away. You know, it's working for you. Now the deal here, though, is that our little trend lines here may be picking up a little bit of steam here. So that would be nice. That would be nice, of course, right? Yeah. And here's June. All right, so June's above the area. So remember when I was talking about deferred? Now it's working on filling the gap, higher angle. You know, it's, you know, the front months were more bearish than the back months. You know, here you're getting the series again. Like I said, I'm going to play yeah, the breakout here. All right. So those aren't really doing it. Those are secondary breakouts up here. 52. What's that? Alarm time. Okay, we got to get going with the show, buddy. All right. So, all right. I need to set some alarms over here. Watch for retests. Remember the body's open interest in everything. Keep an eye on open interest. That's a good band. Like everything else, it has to get above up there, right? This is all the woo-hoo! Yeah, but it's, still got to get above that. You could have ABC pattern too, and she rolls over. So that's the here was the entry. That was basically the entry. EIA day. Well, if it does that, then there you're off and running. Playing it from here. This how does it go? Because you have to roll over all the time, Kevin. Every time I roll over, it rolls over. Yep, that's life. All right, so there's up to July now. Okay, so see if we run into some resistance here with the July contract. I'll take that as the first sign. Be interesting to focus my eyes and see that it says July. So August, we're right at that. Okay, so do we want to sell? So what do we want to do? Do we want to sell August here? And then buy a different month? What did we want to do? Buy March and sell August? Oh, I'll have to take a look at that. We're up to here too. We're at it. Right to the frickin' T, little buggers. Alert. All right, that's the last one. 9. Nope, this is the last one. October. Is this good, yeah? Oh, yeah, I was hoping for a $2 birthday present. Well, so far, it doesn't look that way. But you still have the whole summer months if this fails, right? All right? Comes down, goes up, comes down, goes up. How do you know that's not an ABC pattern? And then it rolls lower. Well, something's going to happen. It's either going to break out to the upside, and then we're off to the races. Or she comes back down, and we're going to have to go to the banker and go, I want more money. More money. I got a feeling. Actually, Kevin has a feeling. Is it a warm, fuzzy feeling, or is it a... All right, so, okay. So basically what we're doing, this is it, or underneath them is basically it. You see this is going to be corrective nature. Volume is dropping down on here, though. That would typically mean short covering on these deferred contracts. Oh, yeah, well, we have EIA. I wonder if I should do something live. Yeah, right. Okay, so what was before this? Natty guess N. O. Let's look at OJ real quick here. OJ. All right. Just an alert deal. I don't expect Florida to get a freeze, but this is the type of thing. The freezes didn't develop. Then all you do is you just screaming, and the 20 points in OJ to the upside is what? What is that? That's a decent amount. That's all I know. It's an oddball number too, kind of like sugar. 1120. Okay, whatever. All right, that's sugar tick. All right, OJ, 150,000 pounds. Is that it? What was the limit on it? Holy buckets, Kev. Boy, it's been a long time, hasn't it? Wow, it's been a long time. Well, the deal, it's kind of like lumber. It's like, options is basically at it. Throw a few $100 at it, see what happens. That's how it kind of, it's when it's thin, right? You have to, they're only moving, 500 contracts. Jesus, I'm playing with myself. Ta-da! All right, sugar bodies are in here. Sideways pattern. It's the whole, you take it on the way out. You go against it on the way down. Here's the happy place. For me, it's the old, if you're long, write some options against it kind of thing. If there's any premium in there, but it's not clean compared to, up here, sell it. Back down here, buy it. Now we're back here. You're like, oh, geez, now what? Hold on tight and, be able to stomach something down here. Buy the deferreds. Silver, okay. The ATR on here, or SAR, this little dot's down to here, 1656 in silver. The ADX isn't going anywhere, and money flow isn't going anywhere. You know, the whole deal is, does it come back through here? We're going to know with the dollar and GDP and all this stuff. It'll become a little clearer. You know, was this just, you know, the whole one-off rally like this, or are we going to get a inverted head and shoulders that we do get another wave higher, or is it just a larger sideways before, you know, we turn it lower? You know, one, this is going to be, silver is going to be industrial demand. Two, are we going to spin this as, oh, we have inflation with GDP on Friday? You know, that kind of, however it plays out, you know, however they want to wrap this, you know, I don't care. All right, so here's the Russell. I need to see some follow through here. It needs to join the others. Here's the money flow. Okay, so money should technically go in on at new highs. Here's today's action so far. This is the stopper right here. 1345 is it. Okay, that's it. If that doesn't hold, then it'll drop 220 or 120 points. That's it right here. Right? Much too long on the bull flag, but we'll take it as a sideways channel. Broke out, should go, and you know, if it swipes the bottom, it should swipe the top, so it's supposed to get over 1395. You know, grunt, maybe on a Friday deal with GDP or something. I don't know, but like I said, I'm looking for some sort of reversal on here. You know, that's what I'm looking for. Is that the put call ratio is getting frothy, and it's, you know, even the Donald's convincing me, well, he's just stomping everywhere, right? I'm going to stomp here and stomp here. It's like, well, actually, if I'm a border collie and I can nudge you a little bit more to the left, stomp. You know, do this here. This is what you really need to do. Trust me on this one. Just do it. It's good for 30 years. Please just do it. It's kind of like if we do go into a depression, then he'll get rid of everybody's student loan, you know, kind of like the housing thing. We're going to throw $800 billion at student loans. Well, then that just frees up a payment, you know, if you are paying, you know. We're in dire straits. We need more entrepreneurs, you know. You know, you come up with an app. How many guys did it take? And then you try and get $30 billion or $16 billion or whatever. No. We need more. All right. Yeah. So this is it on the low here, which is Captain Obvious, of course. In the upper end, the Russell needs to freaking get with the program here. You know, it's supposed to be the leader. Come on, get with the program. Ultra bonds, maybe one of those little doji things or whatever down here. See how it pans out. And that's what I'm looking for. I'm just trying to Dr. Greed right here. Dr. Tar, Professor Feather, up in this area. That's Dr. If it comes through here, well then, won't that be all interesting? Now rates are moving higher. You know, Trump took away the quarter point for first-time home buyers. The home market's just going to kind of have a lousy season. This was a little too deep for I was treating this as a bull flag here, but we'll lean that. I mean, we're talking, you know, this is a low here. Do we have let's go back that far? 14. Yeah, here we are. So we're at 14 levels, you know, and then everything, we got all this afterwards. You know, there you go. We'll call this one double bottom. You know, they want to get rid of the recession now, for the re-election, but I don't think it'll pan out. If you try and tinker with the economy, you also have to time Mother Nature in on this too. Here's the, you know, bear trap. Okay, that's the thing. I guess I'd call it. We'll say that watch out for quote unquote a bear trap. It comes back through here. That's the end of that story, and we're playing this game of wow. It's dropped. You know, we're at 2,000 and now we're at 1880 or 20,000. You know, that's the thing. This breaks out. You can pause like this and retest it. That's fine, but you're going to need the follow through. You know, you can't just have air underneath here. All right, or you're going to set up at least a 9-month bear market, you know, where the first initial drop, I'm aiming for 12%, but I kind of have to go into the 7% thing first. You know, out of, you know, you take a scatter plot of, you know, how much it moves and whatever, you know, I'll start with 7%, which is what, 1,400 points. What does this get us to? This gets us to 1,200. It's damn close. You know, so you know, well, there you go. Boom, 7 point. You know, that, you know, and that's what I'm looking for. And then the other one is, okay, you're down to here, and it's like, okay, it's going to take time to come back the other way. You know, and it's all. And if you're already in, and it rolls over, and all of a sudden it's like, okay, you know, I've been dealing with, you know, trying to position a short side of this stuff pre-Brexit, you know, as far out as possible. Then it turns in, I have a bear market portfolio. Basically, how I'm leaning is I have a bear market portfolio, defensive in nature, to you know, from a bull market one. I'm just, it's like, okay, I want to take advantage of the downside, and then I want to be able to scoop up this stuff down the road. You know, this portfolio has to be passed on for hundreds of years, and we all know that equities only last 17. Or less than that, actually. That's from the S&P 500. Okay, bonds, swing up in here. This is what I'm looking for. Swing up in here, swing up in here, swing up in here. All right, I'm still on that page. Yeah, swing up in here, swing up in there, swing up in everywhere. All right. Corn, you know, blah, hasn't gone through the happy place yet. Money flows in there. The ADX is taking a pause. Where's my RSI? It's kind of stalling. You have this channel thing going on. Grr. It's only 6 cents on the short side. It's just a retest. Well, stand aside on the corn thing. Like I said, I still, you know, we're only in January. You know, I lean towards the greed side of me wants them all to come down to go running into the drought. You know, we're at the lower end of the channel here. I'm looking for something up here. The greedy me says I want to add fresh shorts up in here. You know, we'll see how this pans out. Money flows there, so the money can go in there. So short stocks and buy. I'll look at those short stocks and long debt. Oil, bean oil rolling over. Even if you draw your trend line through here, it cracked it. Draw your trend line a little deeper. This was a retest. This is the good signal on here. This is a good 2-day bar. Large, moved up, was repelled, something fierce. So, flow is out of it, though. I'd fade any rally in bean oil for right now. EDX hasn't turned up, though. Probably when it comes through. Meal, I don't think this is a bull flag, but ADX did turn up on this, and money flow kind of has it's good for another swing. I'll have to look at USDA. You can see that the ADX stopped with this one, so at best it's a pause to a reversal. But I'm treating this as like an A wave, a B wave, and a C wave. You know, GDP comes in soft, you're going to get the swing higher, right? Whoa, maybe we're not going to raise rates 3 times this year. Here's beans. Bodies are in it. ADX is kind of there. Just drew a trend line to the happy place, it looks like. 1020. I want them to go lower. Same thing with 2s. And here's wheat. There's your money flow. The bodies are in it. All these patterns. Why can't we just get something like this? Well, that's because these patterns are exactly what you want with your style of trading, Kevin. You sell options against positions. You collect premium as it goes nowhere the majority of the time. And you take that premium and you add it to you subtract it from your basis, and all of a sudden your longs are now down in here, even though price is up in here. So your risk is actually off the screen. So what are you bitching about, Kev? That's your trading style. Accumulate, 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 and write some options out of the money. All right, so bodies are in wheat. Oh, you could have an A, B, C type pattern here. A, B, and then what? A, B, C, and then C pattern, and then lower. The bodies in wheat. Bodies in wheat, and happy place down here. Oh, you're going to need 20 cents to hold on to this thing if she comes back that much. I'll run through the deferred contracts. Today's Thursday, so I like to Thursday, Friday gets to be me days where I get to actually do stuff off the grid. Kind of like, what was it? Karaoke roulette. You just pick 4 numbers or 5 numbers and you're singing a song. Of course, you're going to have to know that song. Gold. All right, so we're back to gold, bonds, Aussie. Okay, you guys are good to go. I'll let you go. We'll take a look at what was dinging in here. I guess I can run through them real quick. There's oil. Yeah, that kind of did work out there, didn't it? Crude oil did bounce off of there on the long side. So yeah, crude a little under 54 is what this swing is what I'm looking at here. From that there, yeah, blarney, 20 cents, 60 cents, 80 cents. All right, oil, higher oil. And the S&P poked its nose underneath. So I'm looking for you to go above there for now. All right, rock and roll, soldiers. Have yourself a fabulous day. You should be good to go, right? Yeah, all is good. Happy Thursday, January 26th. Bye-bye.